Well, hi there folks, I'm Tim Russell from LJ Hooker with this month's Market Wrap, and of course big news is the Reserve Bank has increased interest rates once again to a 3.35% level. That's a new high and has of course had the desired impact with the way people feel about that. And as we know, not only that, but of course people are talking about the fixed rate cliff that is pending in 2023. The RBA has suggested that some 35% of all outstanding debt is on fixed rate, and some 2/3 of that will come to a variable position during 2023. Now that is going to mean a couple of things, of course, for those people. It may, for some, create some hardship, but all in all, we've seen many homeowners with increased interest rates over the course of the last, well, nearly 12 months, bear the weight of that and still manage to survive and operate. And no doubt many of these fixed rate holders will have been thinking the same thing and either buffering for that change, putting away extra savings, and in fact it's only as little as 1% of those are suggested that may not have the wherewithal or the ability to handle the pressure. Even so, with that extra pressure, of course, many, with all the equity that's been gained over the last several years in price growth, many who may have to be forced to sell because of hardship will still find that they'll leave the situation with positive equity. They've had those price gains, they'll probably come out without losing their shirt and being able to sell their property with a profit in place. So there's no doubt those with fixed loan rates will feel some, or have to make some serious adjustment, but of course curbing of spending and the cost of inflation will be a rude shock for many. But the true test of all of this will really be over the course of the next year to see how that plays out in the actual marketplace. On a positive note, of course, those that were looking to buy some couple of years ago and priced out of some of those expensive suburbs, well, we've seen an adjustment in many of those locations. So what may have been 1.1 in the peak of the market and unaffordable for some is now perhaps 850, 900,000, maybe even 950, but certainly under $1 million, and making those high-end locations look far more attractive. Same goes for renters as well, with of course the rental market easing off a little bit, making it easier to get a rental, although some may argue that's not the case, but it certainly is easing, let me tell you that. Of course, as the market unfolds in the coming months and as we see perhaps further rate rises to come forth in the next quarter, we'll certainly keep you up to date. But I think that just about wraps us up for now. I'm Tim Russell from LJ Hooker, and I will see you around the traps.